G'day and welcome to the Offchain Podcast. Don here with you, and today we're excited to have Julian Kwan on the show. Julian's a 6 times founder and runs his own investments through 2H Capital. Julian's founded multiple companies, including InvestaX, the first company to tokenize VCC structure, and raised 30 deals with a total project value of over $1 billion. He's also the co-founder of IXSwap, the world's first DeFi, AMM, and liquidity pools for security tokens, tokenized stocks, and basically anything that you could call a security or tokenized, you can run it through IXSwap. Hashtag not an ad. Julian's also an entrepreneur in residence at NCAD Singapore campus, mentoring the next generation of startup founders. Let's dive into our wide-ranging conversation with Julian Kwan. Julian, thanks for joining us today. How did you get your start in Web3?
Hey, Don. Yeah, thanks for having us. How did I get my start in Web3? I think, essentially, we started looking at we started looking at the space, blockchain space in 2017-18 with the ICO booms, which led us to look at tokenization, security tokens, which led us to look at the kind of the automated market making models in the DEX world, which led us to IXSwap, which became the automated market making security tokens, and then IXSwaps started building all this other stuff related to NFTs, fractionalized NFTs, and launch pads for STO. So it's been probably a 5-year journey, I think, for us so far, but still feels like we're kind of just getting started. So the original business I started related to this was a real estate crowdfunding platform. It's one of the first online investment platforms out of Asia and Singapore. I was keen to get into kind of a whole new way of investing, raising capital, etc. Than, I guess, traditional ways, which would be extremely, zero innovation, really, right? Until quite recently. So, it's been a combination of many things, but we've been definitely in the space for a while now.
So when you say we were looking into Web3, who's the we? Is it the team from your previous project, or you and a bunch of friends, or who's the we?
So I co-founded the original platform InvestaX in 2015 with my partner Alice. I also brought on new partners for IXSwap, Aaron, and the team. The team is sort of 30-40 people who helped us get us to where we are and continue to build on a kind of daily basis.
So that's a lot of people. 30 to 40 people for a project or for a company, as you're starting to scale up. What was interesting about Web3 specifically for you? I know you mentioned a couple of applications for Web3. What was interesting, or what's interesting for you?
Well, I think ultimately one of the core DNAs of sort of Web3s is, again, high level is community ownership, community connectivity. So, when I think about Web3, what it really means is, the new digital technology-driven systems that allow for a much more distributed, collective kind of ownership based off usership. So Web3 to me is essentially a bunch of different things rolled into one. I think it's obviously the next evolution of Web2, where it's sort of the big bad Facebooks and Google own everything, and all the users are just getting all their data sold and whatnot to a much better system. But also, there's also the crowdfunding component, right? Like when you think about ICOs, when you think about token sales, they are essentially crowdfunding 2.0, whereas crowdfunding 1.0 was equity crowdfunding back in 2013, 14, or a bit earlier maybe, real estate crowdfunding. But that was all predominantly, there was no blockchain involved. So although you had websites, you could invest in all these interesting assets, you could do it from your laptop. When you invested, you actually went through the transaction to get your shares. You'd send money through the banks, you would sign a piece of paper. Some of them had DocuSign, some of them made you print out pieces of paper and fax them. And then you sit on your investments and you do what you normally do with private equity and real estate startups. You sit around and you wait 10 years. So Web3 really a combination of like multiple things, essentially a better system, completely global. This whole thing's about low cost, but then it's a change in who gets to own sort of part of the success, and more of a kind of a distributed I guess, better system. And I think it's much more interesting. And I think it's much more interesting for Web3 business models that, if I put in the extreme example, do you want $1 million from one VC? Maybe a lot of people do. Or do you want a million people to give you $1 each with 1 million users of your platform? That's how I kind of positioned in my own head. And of course, it's probably going to be a combination, but that million users is much more beneficial than any one particular investor could ever be, no matter how you cut it.
Yeah, so new way for crowdfunding, new way for community building. I remember back in 2017, 18, like you were mentioning, in the ICO boom, the strategy seemed to be for projects that are crowdfunding or fundraising to say, oh, we're not an asset. We're not a security. We're specifically trying to avoid that. We're a currency, or it's just a future purchase of our goods or services. But you have kind of gone the other direction. You've gone, well, actually, no, we want to look at securities. We want to tokenize securities. What of that is interesting to you? Like, how do you buck the trend of everyone running this direction? You're like, actually, there's heaps of opportunity back this way. How did that come about?
We used to get laughed out at all the crypto conferences, and everyone was like, security tokens, stupid. Like, a lot of the crypto bros weren't that smart. They didn't think that owning shares in a company was securities, which they are. But why not own them in, better structure, which security tokens are, blockchains. So yeah, there was a lot of interesting conversations that we've had. For us, it was like, cryptocurrency is amazing. It's obviously not asset-backed per se. It's community-backed, but there's no real assets. Might be an estate behind it or shares of a company. And we believe massively in crypto space. Let's see, our supporters. But if you just separate that thinking for a minute, say, all right, what about, and that's got to be built up, right? I mean, Bitcoin, people, Maximus are like, Bitcoin's better than USD, and this currency is better than that, this crypto is better than that crypto for these reasons. That's fine. And that industry's growing, right? And it spurned a lot of innovation. So it went from cryptos went from Bitcoins to Ethereum to altcoins to then NFTs and DAOs and security tokens. So that's brought a lot of beautiful kind of innovations to the marketplace. But when you think about the securities markets, they're already there. You're not trying to create something new from scratch, saying there's no market value, no market cap for these utility tokens. Let's build it up from scratch by giving all those use case. The interesting thing about securities markets is they're already trillions and trillions of dollars. They're already sitting there. They're all sitting there on paper. So they're illiquid, they're not transparent, they're not digital. But you don't have to go and convince people that they're real, because they're already there. So there's been this really funny, interesting journey that we've been on, sort of saying, why don't we take the innovations and the power of this technology, marry it with those real assets, then we're going to see a whole new world of investment products and a whole new use cases for both. I've been saying for years, which people used to laugh at, security tokens might save crypto. Why? It's because there's real assets being issued on these protocols. It's not just all utility and a lot of made up utility. So I mean, it's a lot to digest, but ultimately I've always been thinking that we know this market's enormous. We know it's super inefficient. We know there's been no innovation there. If we can bring that across, we will have, and if you think about what tokenization does, it basically takes private, illiquid, paper-based investments, and it makes them look and feel and act like publicly traded assets, which are digital. There's transparency, there's liquidity. So if you can marry the power of, the characteristics of publicly traded assets with the private marketplace, which is 5 to 10 times bigger than the public markets, that's huge. That's like the biggest opportunity in finance and securities world that we've ever seen. And again, you don't have to convince people that the real estate is better than, I'm trying to say, you don't have to say Bitcoin's better than the US dollar. You can say, you're going to invest in this real estate. Why don't you have it in a better structure? Because in a token and a security token, you could then interact with crypto, DeFi. You might be able to create a liquidity pool. You might be able to lend on it. You might be able to borrow on it. All these things you can't do in traditional paper-based securities. That's the challenge, right? It's saying you guys need to understand that this is a better way to do what you're going to do anyway, which is a very different challenge from, start a cryptocurrency and try and get people to use it and make it more, compare it against the USD. And that's why it's interesting. If you think about the crypto markets, up until recently, 3 or 4 of the top 5 to 10 coins are stable coins, right? They're fiat backed. So it shows that there was a need and a huge use case and a huge need for something other than just crypto by itself. I mean, crypto is priced in US dollars, so it's not either or, it's together, and it's the same thing. So there's kind of quite a lot of thoughts around. You had a few questions. I'm not sure if I answered them properly, but that was my best attempt.
Yeah, totally, man. I would also say 1 Bitcoin is worth 1 Bitcoin. That's that's the Bitcoin maxi kind of phrase. So it's not just. I mean, when you're thinking about securities, perhaps the first thing that comes to my mind, at least, are things like stocks, shares, equity in a company, maybe real estate and things like this. But you're experimenting with many different kinds of assets. What are the other kinds of things perhaps that people haven't even thought about that can be either tokenized or fractionalized, or maybe can be just the ownership of which is being revolutionized or changed by new platforms like Web3 or what you're doing?
Yeah, so there's 2 things to think about. First of all, most of the security tokens that the world has produced in the last couple of years, which is the whole industry, have been actually tokenized securities. So what does that mean? It means Don sets up a company. It's on a piece of paper because most jurisdictions still set up their company. Jurisdictions meaning countries. Most set up a new company in a new country. Normally it's on a piece of paper still. That's changing, but that's how it is. So then Don has a company, paper, and then we work out how to tokenize shares referencing that. And so it's actually a tokenized security. So that's just one point I wanted to make. There's a parallel universe being built, which is paperless-based security tokens, the real security tokens. So that's literally, there is no paper anymore. It's just I'm setting up a blockchain-based company, and everything's on-chain, right? Now, that's actually what a DAO is. They're paperless-based investment structures. So that's just an important point. And we'll see this grow in parallel forever, right? Because the tokenized securities market is the existing securities market that's all on paper, which is $20 trillion, and that'll be going till you and I are both dead. And in parallel, it'll grow over time, all these security tokens where there is no paper at all. We don't need that. And places like Switzerland and Germany and Delaware and Wyoming, those governments have sanctioned the use of security tokens. We don't need a piece of paper, and the blockchain is the ledger of truth for who really owns what. That's cool. It's interesting. That's where it's going. Now, what are we tokenizing? We're tokenizing real estate shares. We're tokenizing equity in companies. And one of the most interesting ones we've got is Mandala Club, which is like the Soho House, which is also they're raising money and issuing security tokens for equity in the company, which is really cool. Parent Co. We've got art. We've tokenized some art with Julius Bar Investment Bank. We tokenized the new fund vehicle, if you will. It's called the VCC in Singapore, which can be used for real estate, venture capital, private equity. We even bought a yacht club, which is essentially an NFT. For today's argument, we'll call it just an NFT, a piece of digital art. But what we wanted to do is we put it in a company structure, owning structure. We tokenize the shares of the company. So people can buy a share of these BAYCs for $1, which is a security token. It's a collective investment structure. So there's all kinds of stuff. Carbon credits are being tokenized, like funds for ESG stuff. So people should be thinking, when you tokenize it, what can be tokenized? Anything. Equity, debt, private limited companies, fund structures. These are just vehicles used to hold the investment. So when we thought about tokenization, so let's talk real estate example. People think you're tokenizing real estate like you're getting like a piece of the building, and that's not the case. You're actually getting a tokenized share of a fund or a company that owns the building. It doesn't matter if the building is on or off blockchain. It's the ownership structure. So tokenization of all these real world assets, it really means tokenizing all the vehicles that are used to invest into all these real world assets. Real world assets don't need to know blockchain, understand blockchain, do have anything to do with blockchain. It's the shares that are digitized, tokenized, that are buying and trading and sharing. So yeah, there's lots of stuff. It's kind of unlimited what people are tokenizing, really.
So you and I look at this and go, no brainer. Seems it's firstly simple, secondly better. How are we going to onboard people? Like, what does it look like then? Who needs to be trained? Who needs to see it? What's the barrier? What's the point of inertia to have to try to get over to have people come from what's been traditionally used and utilized into these new kind of ways of tokenizing and owning?
Yeah, it's a good question. Goldman Sachs, JP Morgan, BlackRock, Credit Suisse, the biggest institutions in the world built their own tokenization platforms. Now, that's positive. However, it doesn't really help you, me, or that real estate manager, or that startup, or that private equity. That's just them building a better system themselves. So, what it means is you got a lot more companies like ours who have gone and built technology, built licenses, and if you want to go and buy and sell these security tokens, you got to register like you will buy and sell any kind of security. So the main back a couple of years ago, the main difference with STOs and crypto from a UX perspective was that a lot of crypto required no KYC. So no KYC AML, know your customer, anti-money laundering, which is basically registration, right? Here's me, here's my passport. So a lot of crypto didn't have that. That's why a lot of people liked crypto, because it was, anyone could buy it. You have to show who you were, that kind of stuff. Well, we all know now, globally, that regulators are out everywhere in the world pretty much. They do not like that. They do not agree with that. So crypto is essentially becoming completely regulated pretty much everywhere that matters. Now, security tokens, that initial barrier, which a lot of people, I don't want to register, and I'll tell people, I don't want to put a bank account, don't want to show my passport. Now it's all the same. So from an adoption perspective, it will get a lot faster now. But essentially, I think the best way to think about it is cryptocurrencies, people who issue cryptocurrencies don't care who owns them, right? Don and I issue a DJ coin, sell whatever, millions of people buy it. There's no KYC, we don't really care, right? Although now we'd probably not let Americans buy, not let Chinese buy, we'd not let Russians buy, we'd probably have a few blockers in there anyway. But conversely, if you and I have our startup, and it's the D&J startup, and whatever we do, we're a fintech startup. If we sell shares to anyone, we need to know who they are, right? At all times. We need to know who owns part of our company. So we would make sure that every single person had a KYC AML, because we can't just run a company and not know who owns us. So it's not how the world works. So the regulator came to us and said, show me your cap table, who owns, who are your investors, who's on your equity cap table. We need to be able to say instantly, here it is, right? Here's all the people. So I think, adoption is really going to come, you're starting to see banks sell cryptocurrency, DBS, Standard Chartered, that TradFi, traditional finance guys are going towards crypto. And now you got guys like Binance, and a few others who are, getting bullish on tokenization. So what's the end game? The end game is you're going to buy and sell these security tokens. You will be able to, I should say, in banks, you'll be able to buy them on fintech platforms. You'll be able to buy them on cryptocurrency exchanges that have gone and got securities licenses. And you're going to be able to buy them everywhere. And I think if you think about issuing these security tokens on public protocols, if all of those banks and fintechs and cryptocurrency exchanges are integrated with these public protocols, that's when you start to get excited by the fact that these security tokens could be global. Yes, there'll be KYC, AML blocks because no one wants to get arrested, go to jail. But you can actually see infrastructure rails where, my wish list and my end game is I can open up my phone and I could buy and today I can open up my phone. I can buy and sell stocks instantly. I can buy and sell crypto instantly. What happens if I want to sell shares in my company? And it'd take me like 3 months to get the paperwork done. What happens if I want to sell shares in a real estate fund? I can't do it, or it might take me 3 months or 6 months or 12 months, or maybe I just have to wait 5 years. So we need to get to a point where you can just say, all right, I'm going to trade 100 shares in my startup for a Bitcoin or an IXS token. or eventually you'll be trading them for other assets, right? Either an NFT or another security token. So the end game is going to be really amazing. But we've got a lot of work to do before we get there. But that's where I think the super majority of activity around security tokens will be on platforms, because you need licenses to issue, trade, custodize any type of security. It's the same for security tokens. It's the same laws. So I think ultimately you'll find these assets on, places that already have captive audiences. Sure, there'll be some kind of quasi decentralized exchange versions of this, but securities exist. They're already around on many different types of platforms, on bank platforms, on stock trading platforms, and eventually cryptocurrency guys will start to add them. Coinbase is trying to get licenses for security tokens in America, amongst other things that it's doing. So yeah, I think that ultimately there are so many as well, and people forget that the private securities market is 5 to 10 times bigger than the public markets. It's looking 10, 20, 30 trillion dollars of assets. Once they get tokenized, they're going to exist on broker dealers, exchanges, but all those people are going to have to get their technology stacks up to scratch and kind of blockchain enabled.
Yeah, man. Do you think there's any space for a true DeFi still, or will everything be regulated and have to go through like centralized or even semi-centralized exchanges?
Yeah, this debate goes on daily inside my startups. I believe that there could be. The development of the DAOs recently, as in, let's just set up a DAO on Ethereum. There's no company, there's no bank account, there's no board of directors, etc. You've seen recently that most jurisdictions that matter around the world don't agree with that. So a lot of the DAOs are attaching themselves to LLCs or PTE companies or something, right? To actually then go back forward facing to the regulators and say, it's actually in a company. It's just tokenized. So it becomes a tokenized security. And it started as a security token, no paper. But to your point, maybe to the dismay of some of the audience, 99% in blockchain is not decentralized. It's positioned as decentralized, but there's a bunch of people running it. And that's just the nature of the beast. Bitcoin is probably the best chance. It's actually a justifiable, no one's really in control. But 99% of projects that I ever look at, there's a bunch of people in control. And whenever they've tried to do sort of, let's let everyone vote on everything, it doesn't really work. You can see that in politics around the world. Like true democracies are basically very challenged against other types of political systems that have much more control centralized. I don't want to get into politics. But what I was really going to say is that your question was, can we truly have a decentralized trading of security tokens? Well, I mean, the answer is probably yes. If we think more about P2P exchange versus exchange of liquidity and market makers. So if Don has a share of a company as a security token, yeah, I'm sure there's a way, and it'll get much more efficient and faster over time, where if you want to sell it to me, we don't need broker dealers and exchanges, but I would still need to register somewhere to buy it, right? The company selling it needs to know. So maybe I can just register on the company website, you sell to me and I sell to someone else, and we've got a much better system. So yeah, I mean, at the moment, it's first of all, I think that there's massive improvements made here already. And for second of all, I think a lot of people like having the support line to call. So, OTC only or P2P only isn't desirable for a lot of people because they can't be bothered dealing with it, and they just don't understand, they don't like the trust. And that's probably where we're at today. And then, who knows over time. I think that the problem with the question, I would say, is that the reason why governments have a massive issue with DAOs is because essentially they're being issued in the jurisdiction of Ethereum, which essentially is everywhere and nowhere. And that's what most governments have a very difficult time trying to get their heads around, and they're not happy with. But we don't need that to happen, and we don't need that to be the end game. Like, if I could tokenize shares of my company or my fund,
sell it for a Bitcoin or Ethereum or trade it for a stock or something right now, I feel great. I mean, I buy all my stocks on, licensed broker dealers, and I don't care. I mean, I don't care that they're licensed. I'm not like, I don't need to trade them in decentralized la la land to make me cooler or better. Like, I'm buying it to make some money. So I think that's what's been proven in crypto as well, that most people involved just want to make money, and a lot of the hardcore decentralized arguments are, it's a good mission and it's a good focus to work towards, and it comes in many, many different layers of or percentages of decentralization, etc.
Yeah, for sure. Like, I can see how, for example, you mentioned before, basically the friction of being able to buy and sell through private markets, and something that Web3 has really done is help to not eliminate, but certainly deal with a lot of that friction. So you can still do that in a regulated kind of jurisdiction, but removing a bunch of the traditional friction. I know that you have recently been going through the process of, getting licenses, and you've done that before. Done it again. Man, that for me it seems like a monumental task. It's one thing to use or come under somebody else's licenses or white label things, but to then go and kind of do the whole process yourself. Can you maybe tell us what that's been like, or what kind of an arduous task it is? Is this something that more people should be trying to do? What's the process, basically?
Yeah, I'll caveat the next couple of statements with, I am the chief representative of my licenses. So that's an important point. I have gone and got these licenses. We have a broker dealer and an exchange license in Singapore for security tokens. We have a cryptocurrency license, a custody license, a broker dealer and exchange license for security tokens in the Bahamas and IXSwap. So we have six to seven licenses, collectively taking about 5 collectively all together, back to back. Like, how much did it take all these? About 5.5 years. Some of them were done at the same times. And so it's challenging, right? So if you go to a regulators, and I would say the Singapore regulators are extremely forward thinking. They've been trialing blockchain projects, CBDCs, blah, 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 lots of different things in 2013. And basically we went in and said, there's this technology, we want to build a first security token exchange, and we want to make it public architecture. So we want security tokens issued on Ethereum and anyone else, and we want Don selling to Julian inside the exchange, and that's real time, and it's a real trade now. And blockchain is the settlement layer. This is just one example. In a traditional exchange, there might be 3, 4, 5, 6, 7 different companies in the middle of that transaction that we just made. It might take 3 or 4 days, and we're paying fees. And in a traditional stock exchange, even if you buy the stock, you don't really even own it anyway. It's owned by somebody else. It's a different discussion. But my point is, this is new architecture to do the same concepts, right? Trade a security token, buy a security token. It's the same thing. It's a different format. So, I think it's hard, challenging for the regulators to get their heads around that, but it's happening, right? So the long and the short of it is, licenses are extremely painful because they take years. You might not get them. You have to invest all this money and time, and you're making no money off those businesses whilst you're applying, because if you were trading without a license, it would be called illegal. So it's very, very painful. And you've got to get in early, right? Because as a regulator, especially with big blockchain, digital assets, each regulator around the world started to come on board and has some of them for years. And day one, they don't know anything, or they know very little, like anyone on day one. And so you think about it from a regulation perspective, every day, there's all these crazy new blockchain startups sending you applications for new business models, new technology. So the knowledge of the regulators is going like vertically, right? So it's much easier to get licenses in new jurisdictions very early, because it's a massive hustle and everyone's trying to work it out. And then when 1,000 people line up behind you for the same license, obviously the guys at the end of the line are not going to get these licenses. So on the licensing front, you've got to have huge stamina. You've got to have you've got to be trying to push the boundaries of the new business models whilst acknowledging that the laws exist. So if you go too far away from that, they're not going to be able to approve it. Right? Regulators inherently are risk averse. So you need to come up with business models that are kind of in the same rails. They might be slightly off because it's better. You say, well, I want to do this business model. It's better. Here's the technology. I want you to adjust this. Give me that. How does it work? And then you've got this unknown timeline and probably 1,000 phone calls back and forward trying to work it all out. And then, you might get a no at the end as well, which has happened to a lot of people in different parts of the world for different businesses, right? We were lucky here. We were very early. We've been very dedicated. We've got some of the first licenses to do that, and the same in the Bahamas. And, there's a lot of hoops to jump through. There's a lot of information you have to give. There's a lot of answers to questions. Sometimes you answer the same question, it feels like 100 times. But then you're hoping to pop out on the other end with something that's extremely valuable. And, want to be first mover in a new industry has, licensed businesses are typically infrastructure of some capacity. And if you think about the concept of, who makes money in the gold rush, it's the people selling the picks and shovels and selling all the infrastructure that everybody needs. And then those guys can go and work out if they're going to make money or not. So infrastructure, licensed platforms have proven to be some of the most valuable pieces of the puzzle in all different industries, tech or not, right? So that's the risk, that's the bet that at least we're taking. And that's why it's also challenging and painful, but there's success there for those people that can get successful, but there is a lot of failure as well.
So with regard to regulation, then, if you could just wave a magic wand, for example, what are the missing elements that are preventing people from, really onboarding on scale, or preventing more people from moving into the, like you said before, the JP Morgans and Credit Suisses and whatnot, they're all moving to these directions, but internally, what is it from a regulation perspective? You can, wave the Julian magic wand to change any single or, grouped aspect of regulation. What's going to help?
No one's ever asked me that question before, so I don't have a prepared answer, but I think it's what is true about regulation typically is that it's old and it hasn't changed for a long time. And it means that there's significant advantage to the incumbents and there's significant disadvantage to the startups. So that's a fact of regulation. The problem with America right now is that the securities laws are 100 years old, and no one even had a telephone back then, and here they are trying to jam blockchain into this, laws written 100 years ago that didn't even have never heard the word technology before. Ultimately, I think that you need to tweak all of this stuff, because it's irresponsible thinking to just say, I'm going to roll down to a regulator and say, you've never heard of this new technology and there should be no regulations and you shouldn't have to do anything. You've got to then look at it and say, all right, what are we trying to achieve here? And what does the current space look like? And can we break down some of those barriers? So the wish list is do we really need to suffer some of these processes that were around for a good reason? Often, people forget regulation exists because without it, everyone scams each other. And that's pre-blockchain. This is human nature. So regulations actually exist even if people hate regulations. It's they only exist because so many people pull the scams. So, and it's the same thing in blockchain now. People who are super maximalists regulation sucks. It's how many scam coins were they that were completely unregulated? And there'd be a lot less of them if there was at least some process. So you have to try to find that balance between what's realistic from this is how a country operates and this is how their rules are today, with how do we bring this new technology and try to remove some of those barriers, but you've got to respect what exists. Otherwise, it's kind of a waste of time, I think. Yes, there's no magic bullet, because there's lots of different regulations and different things. If you're a real estate group, you're a private equity group, the blockchain, you're crypto, you're a payment rail, you're a custody. Securities markets are complex. So there's different rules and regulations for everything. And that's the other challenge as well. There's so many different regulations. But ultimately there is too much regulation, and that's just been building on each other because it's been siloed and everyone comes up with a new idea. They just add it and they don't really look at what it means for the rest of it. But there's no silver bullet to that one. It's just try to set your startup in a forward-thinking jurisdiction where there's positive support for it. Otherwise, you just waste the time. And that's why a lot of the US startups in blockchain are leaving the US, because there's no clarity around regulation. So they can't build aggressively because they don't know if it's going to be called illegal or not. So they're going to leave. So you need to have some clear regulations,
I was working with a startup back in 2017 and working with regulators in a particular jurisdiction, in a regulatory sandbox, trying to figure out what do we do with blockchain, Web3, et cetera. Building quite well and working with them and dialogues open and whatnot. Then they came down and said, everything you're doing from next month is going to be illegal. And then it was done. That was it.
Yeah. But look, Asia, I give a reach out. I give a sort of a shout out to Asia. Like Singapore is completely pro, Hong Kong's now completely pro, Japan and Korea are pro. Like, so Asia is going to be a really strong blockchain market, crypto, security tokens, etc. Because Asians aren't anywhere near as, I think the funny thing I see, you're just looking at crypto, is like you could talk to let's call it super old person in America or some other countries and sort of talk about this crypto thing, and everyone's like, what is this? And is it challenging the US dollar? I don't really understand it. And if you go and talk to a bunch of older people in Asia and you go, this is crypto, and then usually the first question is, how does it work to make money? And if the answer is they can understand and they can, then they're cool with it. And then when you're not fast, no, I don't buy it. And so, Asia is a lot more practical and pragmatic, just about what it is and what it isn't. And there's a lot less drama over here related to, a lot of the regulations, which is, there's still a lot of stuff to deal with. But I think it's going to be really a great place to build out startups for blockchain.
That's great, man. What are you most excited about in not just the year ahead, but just on the horizon? What's on the horizon you're most excited about?
I think tokenization of real world assets, which is something we've been focused on for years, is finally getting some tailwinds. So I'm most excited by seeing really cool, interesting assets being tokenized and more people kind of buying them and less and less, just seeing this whole movement change, and it has changed from who's coming involved. So it's like when there's a brand new industry that needs licenses and no one's got licenses, well, the industry doesn't go anywhere, right? It goes around in circles, which is what the STO industry did. And now there's enough people with licenses to do an end-to-end issuance in a legal, compliant way, blockchain level, et cetera. You have like some of the best companies in the world getting in space. So no one wanted to be first and everyone wants to be second. So short-term, mid-term, I'm super bullish on tokenization of real-world assets. Crypto, still very bullish, but lots of issues. But I think that that's probably and IXSwap. I think the ability for people to create a security token liquidity pool on their own with their own asset, $10,000, would never be possible in the history of the world before. Is IXSwap's like the killer application for the STO industry. So super keen to see that grow this year.
Makes sense, man. Before we wrap up, you started a bunch of companies, right? So serial upon serial entrepreneur. And so we've got a bunch of people who watch and listen to the podcast who are either interested in entrepreneurship or are currently in startup mode or have been a startup founder and trying to grow and scale. What's interesting to you about startups? Or what makes you go, well, let's do this again? Or that was very difficult, but here's a great opportunity. Let's give it another crack. Whilst the other one's still going well.
Yeah, I think everyone, myself included, is blind to the data about startups, right? And what I mean by that is 99.9% of startups are going to fail. Everyone just believes it's not going to be them, right? So I think that it's something to think about. It's pretty soul destroying working in startups, and I've seen it, I've experienced it in different capacities, years of energy, effort, time, and then it doesn't work for X, Y, Z, million different reasons because there's so many things come out of the woodwork that weren't planned. So you've got to really, I think, if you truly believe in what you're doing and you think it's you think the opportunity is big enough to kind of match to the risk, then we kind of go for it. I think it's probably, I did my first startup when I was 21. Probably would have been way better if I just went and worked in a some company for 5 or 10 years, and that's just what I didn't do because that's just what I was kind of how I built. That was a painful road, and many lessons learned. So there's a million different ways to do startups. You can start them at many different times in your life. You can invest in them, you can advise them, you can point to them. You can be a founder, you can co-founder, you can just be an ESOP holder and come in later in the game. So there's certainly many, many different ways to kind of skin it. But yeah, for me, I think it's like I've always been excited about new things, like new industries and new markets. So I went to China, and then I got into tech, and I got into blockchain early. So but early also can be very painful. You take a lot of arrows in the back when you're kind of out in front as well. So there's a lot of lessons there. But look, I think that there's a million different things you can do every day as well. So you really want to make sure that you're excited and believe in what you're doing, because there's going to be so many painful days where you've had enough, or everyone's had enough, and it's some dark moments and tough times. You're always trying to push ahead and stretch the limits across your startup, and then your brain, and you got to have good stamina to not go crazy and not give up. It's usually most startups die right before they needed just that little bit extra. They needed this, they needed that, but people just had that enough. So I think it's like it's a game. It's a game as well, right? So funding's a game, the VC investment's a game, the startup, you've seen the game being shaken up very recently, valuation, this, that, and the other, and what people really want to see, revenues, blah, blah, blah. So you got to remember it's kind of a game, and try and learn the game as best as possible, and try and hustle your way to some exits, which is obviously the end game. And so like for me, this is the most exciting space on the planet. It has been for years. I think it'll continue to be. It's the biggest opportunity. It's global. It's new technology. It's existing. The biggest markets in the world that need to be completely turned on their heads. So and I think we're big pro all kind of digital assets and all the crazy stuff that's going on.
Yeah, man. So for founders or potential founders, heap of grit, heap of resilience, stamina, hustle, and then a little bit of naivety. Because if 99% fail, you gotta believe you're going to be in the 1%, otherwise you never get started. And what would you say, if we could finish on this one, what would you say was the best or most impacting piece of advice you received, either early on or at any stage as a startup founder, or even as a CEO?
One thing that kind of stands out to me was, this is really for all the pro entrepreneurs or pro startup people that are almost, as you said, naive and blinded by the light. One of my uncles was working in a corporate company for about 40 years, and right before promotion to the top job, he got axed and sort of thrown out on the street. And when I saw that, I thought, I don't want to ever be in a position where someone could fire me. Which is not really true. You can get fired from your own company if you're big enough or things don't work out. So that was a big kind of lesson. The other one I kind of got, I guess, was my dad was a lawyer. He ran his own company, so he was a founder himself. But he always said, don't work in don't do anything that's paid by the hour, whether that's anything, right? Lots of things paid by the hour, because when you're not working, you're not getting paid. And I was like, it's kind of smart advice. Look, I was trying to set up a company, and my mum was an entrepreneur. She started had a jewelry business, and always things on our own terms. So yes, there's a few touch points for you. Hopefully that was helpful.
Yeah, good on, man. But absolutely helpful for sure. One question we like to ask is, in closing, is do you have any views that you hold that nobody else holds, or do you have any particularly contrarian views or things you like to talk about but you can't talk about them because people don't like to hear it? Do you have any of those?
Well, I'd say that for many years, 2018 to 20, we believed in tokenization. No one else did. Right? I went to 600 crypto events. Sure, there was one or two people in America and one or two people in other parts of the world, but specifically in Asia, no one believed it. I don't know why. So yeah, that it's nice that things have changed in this environment, 2023. But yeah, related to this whole industry, I think it's like, that's probably the one thing that, I guess, And that's why we're so kind of happy about what's happening right now, that everyone's kind of getting on board, tokenization becoming more mainstream. It's like we did the first tokenization event on a rooftop bar here in Singapore in 2017 AD. No one cared. I think 10 people came to the free spring rolls and the beers. Everyone was like, this sounds great. What are you talking about? And I was like, it's obvious. Isn't it obvious? Like, how is this not obvious? So yeah, been the journey.
So not only now are you essentially first and also ready, but also proven right. So vindication after all these years.
Well, yeah. I mean, I don't know. If you go onto the bus for a couple of years, I don't know if you're proven right. You might be proven stubborn and stupid, and just able to survive, really.
Oh, man. Well, man, really pumped about what you're doing and about IX Swap and the future of tokenized assets and, bringing the whole DeFi and crypto market with you, which is really wonderful. Thanks just for carving out some time to speak to us today. Really appreciate it, mate.
Yeah, awesome. Thanks for having us, and hoping that was helpful. People can find out about the platform. I think on all the links, we'd love to have more of the community that believes in tokenization, and we welcome people all over the world who like what we're up to.
Someone wants to find out more about you personally or hear from you more, where can they find you?
I'm mainly on LinkedIn, really. I do use Twitter to put those handles inside the notes. And if anyone needs to speak to us about any of the business stuff, there's the websites they can fill out the contact forms and get in touch. Or they can also reach out to Don and he can make an intro for us.
Sounds great. Good on you, Julian. Appreciate it.
Awesome. Okay, thanks for having us. Hopefully that was helpful.
Thanks for joining us for this episode of the Off-Chain Podcast with Julian Kwan. Great to be able to catch up with Julian. We love bringing you high caliber, high class guests like Julian. And if you'd like to help the show out, you can do so by liking, subscribing, or better yet, share the episode and particularly highlight a part of the episode that you enjoyed with a friend. Help us spread the word and join us next week for another episode of the Off-Chain Podcast.